these streets, yeah. Profits up, profits up, profits up. Ain't no luck. Got a bag, got a whole bag. Profits, I'm in love. Profits up, profits up. Let's profits up, profits up. Profits up, profits up. Ain't no luck. Got a bag, got a whole bag. Profits, I'm in love. Profits up, let's profits up, let's profits up. Get the profits up, let's profits up, profits up, profits up. Ain't no luck. Got a bag, got a whole bag. Profits, I'm in love. Profits up, profits up, let's profits up, profits up, profits up, profits up, profits up. Ain't no luck. Got a bag, got a whole bag. Profits, I'm in love. Profits up, let's profits up, let's profits up. Get the profits up, let's go. Every time I wanna see you, I smile. You baby girl, I pop your double sound. Every time I wanna see you, I smile. Just wind me up, just wind me down. Every time I wanna see you, I smile. You baby girl, I pop your double sound. Every time I wanna see you, I smile. Just wind me up, just wind me down. But when you're around me, I know I'm found. You baby girl is what I'm about. Into this world we know we're allowed. What's going on, guys? We get started just a minute. I just want to make you so proud. Smile to my face as a love. You so much power we have. Too sure I adore you so much. Planning to have the best night. Every time you move that way, you What's up, guys? Let's get started. Let's get started. How you guys doing this evening? Hope you guys are doing good. Hope you guys are doing good. Welcome. Today we're going to be talking about trading psychology and how to master your trading mind. All right, with some new mindset and some new rules. All right, some new mindset, new rules. This is very important because it's Sunday and the market's open, and you have to get your mind right through Monday, Tuesday, Wednesday, Thursday, Friday, and maybe even Saturday if you trade that cryptocurrency or binary playing the options. All right, you got to get your mind right for the week. This is the time to get your mind right for the week. Look at those forex pairs, look at those indices, see what's happening. Enjoy your time, but get yourself ready, get your mind prepared to take those trades. So welcome, guys. So let's talk about what is trading psychology, right? What is trading psychology? When traders refer to trading psychology, they are normally referring to mistakes and mental errors that they continually repeat and cost some money. As traders, we are human, right? We are human. We make human mistakes. We make error. We have human error. Now, when we make these trading psychology mistakes, these errors are normally fall into two categories: errors from being greedy and from being fearful. We are very greedy as humans. When we see money, we get excited and we want to make more money. When we get the chance to see that we can make more money, we will do anything in our power to hold on to a trade and try to make that money no matter what, because we see the trade going in a certain distance. We see where it can go. We see the highs. We see the lows. We see where it can go. But we become greedy. Instead of taking our 5% of the day, we're going for 10% when we should only be going for 5%. And the errors of being fearful is that we're afraid to lose. And traders, we are afraid to lose as traders. And that is something you have to get rid of. If you don't understand on working on these errors, you're going to have a hard time as a trader. To be a successful trader, you have to understand you cannot be greedy, and you understand that you're not going to be able to win every trade. It will be impossible to win every trade. So why does forex trading psychology matter? It's a big issue with trading psychology because a lot of traders don't believe in it. They think that, well, they get into this trade that they're going to go ahead and they're going to win no matter what. When they click that button, they're going to make money. Well, that's not necessarily true. The reason these errors are so common is because when trading, we are all dealing with either making or losing money. That's the whole ideal of trading. We're gonna make money or we're gonna lose money. This brings on feelings of greed and fear again. When we are being greedy, we can have a tendency to make the same mistake over and over again. That will hurt our results. If we're a greedy trader, if you're a greedy trader and you're not gonna make you're not sorry, you know that you should have taken your wins or should have executed those losses and cut those losses. All right, and you're still being greedy, trying to get back to the market, and you're not learning from your mistakes of being greedy the first time or the second time or the third time or the fourth time or the fifth time. That's gonna make you a very, 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 I'm gonna say, trash trader. All right, you want to be profitable in the market. So if you continue to make these same mistakes, you need to reevaluate your trading or your strategy. All right, reevaluate your trading, your strategy. Is your entry too far or too early or too late? Is your exit too early or too late? All right. Do you have a strategy? Are you following your trading plan? All of these matter because this is your trading psychology. Your biggest trading psychology guide is your forex trading plan. The plan that you make to make money in the market. The plan that you make to grow your account. So the mistakes that we see the most is that you're not taking profit when you should. When you know you should be at TP1 taking profit and you have TP20, or sorry, TP of 20 pips, and you're at 17 pips and you want it to hit that 20 pips, that's being greedy, guys. You see it at 17, you can either make it risk free or just take the 17 pips. Don't be greedy. When you know you want it to make it to 20 pips, that's your mentality, that's your psychology saying, I'm being greedy. I see 17 pips and I know my TP1 is 20 or TP in general is 20, I need to go ahead. I need to take my money and go. Why? Because the market is going to pull back on me and you're being greedy. Why lose 17 pips and go back to -5 pips when you are already in profit 17 pips? So that's the greedy part that we take. Making far too many trades, all right? Making far too many trades than we should. There's sometimes that we put 20, 30 trades in, and we know we shouldn't be putting 20, 30 trades in the market. But we should be putting between 5 and 10. Or if you're a scalper, you put between 10 and 15 trades. So we want to make sure that we are not taking too many trades within that day or within that hour or within that intraday trading session. And lastly, over leveraging. All right, over leveraging, risking a lot more than we should. That is the number one trading issue. Risking a lot more than we should. Over leverage is the biggest trading mistake. All right, and this goes from when you make money in the market and you see how much you can make. Instead of you using that dollar lot size, you bump it up to $3. You bump it up to a $3 lot size when you know that your account can't hold one at the drawdown, but two, your risk to reward is very, very terrible, but you want to try to make fast money. You want to try to make fast money. And this is when that get rich mentality kicks in. And you want to get rid of that. All right. Again, that is also greed. That get rich mentality is greed. So we want to get rid of that. We want to get rid of that for sure. All right, so why do we try to get rich quick? Why do we try to get rich quick? When we hop into this forex market, a lot of traders try to get rich quick. They make a lot of money, they make $100, $200, and then they start losing some money. They start to actually experience some losses in the market, which is fine. That's human error towards your trading plan. You have to calculate that human error, and then they want to begin to over leverage. Over leveraging starts. They try to get rich quick. Well, we do this because we kick into greed mode, think we are going to make a lot more money faster, but it does not work that way. This investment, this forex trading, is a slow investment. When we move into fear mode, another set of mistakes creep in. It creeps on us and we don't even realize it. Holding on to our losses for far too long instead of quickly cutting them short. We know we have a stop loss. For example, we know we have a stop loss. And when you see that the market is not going your way or your trade is not going your way, you take off that stop loss. And you know you shouldn't take off that stop loss. And you're like, well, the market is going to come back up or it's going to come back down. It's going to go back into my favor, and you're 100 pips in deficit or 100 pips negative in your trade, and now you're 200 pips negative in your trade, and you're wondering why the market is not coming back. All right, you should have cut your losses a long time ago. The last 40 pips or the last 160 pips ago, you should have cut those losses. This is why every Thursday we teach TDI. We have the exits, entries and exits. It's very important that you understand how to exit the market. If you don't know how to understand the exit of the market, I need to see you in class. but cut your losses. All right, learn how to cut your losses. Don't be afraid to lose in the market. When we lose in the market, we enter to the next good trade. We enter into the next good trade because why? We lost the last trade. So we lost that last trade. Now we want to get to the next good one as fast as we can because why? We lost the trade. So now we want to make up or we want to revenge trade. Revenge trading is an issue. It's getting back into the market when you shouldn't. Don't click the button unless you see an entry. Don't click the button unless you see an entry. All right. So therefore, entering that next good trade because we lost is not a good trading mindset. All right. Definitely watch out for that. Definitely watch out for that. So how do we get the best trading mindset? All right, how do we get the best trading mindset? If you don't have any emotions around making and losing money while you're trading, you are not risking enough. One, yes, you can under risk or they call it conservative risking, right? You can conservative risk, meaning if you're supposed to be risking 2% and you risk a 0.5%, that's fine. You're not going to have any emotion if you're risking 0.5% in your account. Why? Because you're not going to lose anything. You could let the market run with almost no stop loss and not do any damage to your account. But when you're trading with the proper lot size and the proper risk management, all right, you are going to have emotions in the market because you know that you can win this trade, but you also know there's a risk that you could lose this trade. So you're going to trade with emotions. To get the best trading mindset, you need to first acknowledge that you could both win and lose. Traders don't understand that they can win and lose. They think they can just win the market. When you're winning for 3 weeks in a row or 4 weeks in a row, and you take that one hard loss, it hurts. It sucks. Or you blow that account, it is terrible. It's a terrible feeling. All right. We've all been there. If you blow that account, if you take a nice hit in the market, it hurts. And you can, and that it hurts. That's good because now you recognize that you can lose in the market, and that's with any investments. That's with stocks, forex trading, cryptocurrency. All right. If you bought Bitcoin right now and you put your money into Bitcoin right now and it dropped back to 53, you're going to lose some money. You're not going to make any money because why? It's so high right now. That's why they say buy low, and sell high. All right. So we want to make sure that we understand our risk. And that comes with risk management. That comes with risk management. Understand your risk management, knowing your risk to reward, knowing that you could win and lose in this market is very important. Once you begin to understand these feelings in full range of motion, you can experience, you're going to experience this trading and you're going to just deal with it. Well, you're going to know if you lost, you're going to know why you lost. You're going to know if you win, you're going to know why you win. All right. There should be no doubt in your mind why you won the trade or why you lost the trade. By now, you should definitely understand your wins and your losses. If you don't, you need to go reevaluate those charts, reevaluate your strategy, and create a new trading plan. But the trading psychology, a part of this, is very important because winning and losing is going to happen in the market. One week you're going to be killing the market, and the next week you're going to be terrible. It's just the way the market runs. The market is always right. If you can get in your head that the market is always right, your trading psychology, your emotions are going to be at default to where, all right, I understand I'm going to win, I understand I'm going to lose. I'm going to take the best possible trade. There's trades that I take that I can't even be mad that I lost because it was such a great setup. I would take that trade 500 more times. It just the market does what it wants. All right. So instead of pretending you feel nothing, you can actually work on it and learn to overcome it and become a better trader. All right. So this week, guys, definitely work on your trading psychology. 100% work on your trading psychology. Very important because this is the year that you want to start growing your account. It is very hard. It's painful trying to grow the account, especially when you lose. You could be up $1,000 and you tag on $400 more, and all of a sudden you lose $200. Now you're back at 1,200. You went from 1,400 to 1,200, and now your trading psychology starts to kick in because now you're starting to revenge trade, and you're starting to put higher lot sizes because you want to make up for those days that you lost, or make up for that compounding that you got to make up for the next couple of days. And instead, you want to have slower growth, and take your time. All right. Don't over leverage on your account. Don't blow your account. If you make a loss, cut your losses. If you see that trade going the other way and you take off that stop loss, don't do it. Keep the stop losses there for a reason. The stop losses are usually calculated for your risk to reward for a reason. You don't want to lose any more in the market. All right. You don't want to lose any more in the market. So always remember that. Always trade with the stop loss. So some things that help, guys, some trading psychology tips. There are many different psychology tips that you could use in trading. These are a few that I use and that help me become a profitable trader. So don't risk too much on any one trade. I don't try to risk more than 2%. All right, if I'm feeling froggy, I'll do 3.5. All right, 3.5% at max. But don't risk too much on any one trade. Risk 1 to 2% of your account and stick to it. Stick to it because you could lose 5 trades, win 5 trades, and still profit. You could lose 10 trades and win 5 trades and still profit in the market. All right. So don't chase your loss with revenge trades. If you lose in the market, don't try to make the next 2 trades up. One, by over leveraging, and also by taking too many trades, which again is don't over trade and take too many trades. Don't take so many trades. If you're taking signals from other groups, don't take 50 signals from other groups. Take it from one group for the day and stick to it. If you don't win in that group, be done trading. All right, be done trading. Don't go to the next group and try to take another 10 to 15 trades to make up because you lost in one group. I understand. If you lose a few trades, just go back into the market, reevaluate, do some chart work, do some homework, and reevaluate that trading. See why you lost or see why that trade lost. All right. Don't let the last trade stop you from making your next trade. Again, this is fear. Don't be afraid to go get back into the market. If you get stopped out, get back into the trade. I always say that. If you get stopped out, get back into the trade. Always cut your losses short at your stop loss point. Again, keep your stop loss at your trade. Your stop loss is like your mom's, like your dad's, like your pops. It's got your back. Stop loss is your guide, is your guidance. All right. Don't take off your stop loss. If you take off your stop loss, you're asking to blow your account. You deserve to blow your account. If you're not trading with the stop loss, you 100% deserve to blow your account. Why? Because you're saying that you are willing to lose your account. You're saying that if the market pulls back on my $1,000 account and I have no stop loss, I am willing to lose $1,000. That is what you were telling yourself. I am willing to lose $1,000 on my $500 account. If I don't have a stop loss, I am willing to lose $500 account. If you are willing to do that, so be it. So if you have a stop loss, you are saying, I don't want to lose any more in this market after this amount. All right. So have your stop loss on. Always take profit at your designated profit target level. Don't get greedy and hold for more. If you have to take profits, all right, have your risk to reward set. All right, have your risk to reward set. Make sure your trades become risk free if it hits TP1. If you have take profit one only, all right, just make sure that you are taking your profits at the right point. If it's 30 pips and you see that your account is at 25 or 22 and it looks like the market is just not going to reach that 30 pips, take your money and wait for a new trade or wait for a new entry. Don't get greedy. You would rather have 22 of 30 pips than to have 0 of 30 pips. All right. Why lose the 22 pips you just had and go back -5 pips when you back in the market? When you can take those 22 pips, the market can go back to your entry and you can re-enter at the same parameters with the same stop loss. And guess what? The trade goes in your favor and you collect another 15 to 20 pips. All right, you could another 15 to 20 pips. Or if you have that stop loss in the same parameters, you just break even. And there is nothing wrong with breaking even. That is just saying you double tap on that analysis and it did not go your way. And that is okay. There's plenty of times that I break even and it's okay. I'm okay with that. Understand your risk, understand your risk to reward. That is number one. But also, guys, cut your losses. All right, definitely know how to cut your losses, and that comes with exits. Know how to exit the market. All right, this is the year, guys. You guys want to grow those accounts to 6 figures. This is a great chance. The market's trending. You guys been going for about 8 or 9 months already with us, or 9, 10 months already. Sometimes some of you guys a year already with us. So you guys are definitely profiting. It's just that you're not a bad trader. It's the trading psychology. So don't think that you're a bad trader. Just know that it's your trading psychology and it's also your risk management. That's all it is. It's the risk management and trading psychology. You know when to enter the market. You know when to exit the market. Now it comes down to risk management and your trading psychology. If you could get those two down pack, you will profit heavy in the market. You take those two and you combine them, you will profit in the market. If you could say, I'm done for the day or I'm done for the week, if you make 40% in 1 week, you should be done for the month because you only need 40 to 60% of the for the month to grow your account. Honestly, you only need 40% or 60% of your account to grow your account for the month. towards your six-figure goal. All right. So some of you guys get 40% in a day. Some get 40% in 24 hours, 48 hours. I've seen these accounts. You guys are growing them. You just have to say, I am done. If you can get used to saying, I am done, I'm good, I'm out the market, get used to those words, get used to that mentality. That should be your trading psychology. I'm done for the day and move on. If you could do that for the next couple hundred, the next 6 months, your accounts are going to grow very, very, very large, and you want those large trading accounts, and that's where the investment comes in play. But do you guys have any questions? I appreciate you guys being on this call. You guys have any questions? If not, guys, here's some books for you guys that I use. So some trading psychology books. These are my top three books that I've read and that I absolutely love. Write them down, take a picture. These are the ones that I read. I read these over and over, and they help me 100%. My number one is Trading in the Zone by Mark Douglas. I love this book. It talks about wins and losses, and this is what helped me start saying I am done. All right. When I make a loss, a certain percent of my account, I say I am done. All right. If you lose 10% of your account, be done. All right, be done. If you lose 10% of your account, be done trading. Be done trading. All right. The Disciplined Trader by Mark Douglas is great. And also Trading Psychology 2.0 by Brett Steenbarger is great as well. So these are my top three books that I like that I rate, that I read, and that are good books. And definitely you can PDF them. These are in the Discord, and they're also on our More Than Money app under the ebooks as well. If you don't see them, let me know. I'll re-enter them, but they should be already on these. So, guys, here's some trading mindset quotes here. All right. So, learn to take losses. The most important thing in making money is not letting your losses get out of hand. This is very true. All right. Know when to cut your losses. Do not let your loss run 100 pips or 200 pips in the negative. Cut your loss and get back in. It is much easier to gain back 40 pips rather than 100 pips. All right. So, if you cannot control your emotions, you cannot control your money, which means if you don't know your risk to reward and you don't know your exits or your entries, you're not going to be able to know how much you're going to win in the market or how much you're willing to lose in the market. You must know your risk to reward. Risk management is everything. This is why traders quit in the Forex market. This is why they fail in the Forex market. They don't understand risk management, and risk management is crucial. Do more of what works and less of what doesn't, which means follow your trading plan. If your trading plan works, follow it. If your strategy works, follow it. Don't go against your rules. The moment you go against your rules is the moment you will get smacked in the market. It's the moment you start losing money. All right. So do what works and not what doesn't. Just because one day your strategy doesn't work and you lose, that's okay. It's human error. And then you look in your groups and you see everybody else is making money. That's okay. Let them make money. Be happy for them. Let them get their bag. But you just had a bad day. It is okay. You're not going to have a great day every day. And lastly, guys, risk comes from knowing what you are doing. All right, risk comes from knowing what you're not knowing what you are doing. All right, risk management. Know your entries, know your exits. All right, know why you lost the trade, know why you won the trade, know why your strategy is working, know why your strategy is not working. All right. So risk comes from not knowing what you are doing. All right. So know how to enter the market, know how to exit the market, understand how to read that chart. No matter what chart you're using, bar, line, all right, your Hakanashi candles, your regular candles, if your strategy is price action, if your strategy is EMAs, if your strategy is SK5, it doesn't matter what strategy you use. If your strategy works for you, 100% continuously use it. All right, all the strategies, if it works for you, it's good. I say every strategy works because somebody's making money off of it. All right, just because you're not making money off that particular strategy doesn't mean it doesn't work. All right, but it works for someone out there that is already making money off of it. So I always say every strategy works. It's just what works for you. You have to find what works for you. And once you do, you're going to profit in the market and it's going to be a great investment. Forex is an investment. All right, this is a profession. So I appreciate you guys being on. You guys have any questions? This is a short class. I want to get you guys ready for the week and we're ready to catch these pips this week. If not, I appreciate you guys being on. And I will see you guys this week. Let's get this back this week, guys. You're welcome. You're welcome.